when we're looking at the farmland and timberland categories of alternate investments, normally we're looking at natural resources. So if you're investing into farmland or timberland, you're investing in the natural resources aspect. Natural resources is your alternative asset class. Now we need to understand the difference between farmland and timberland. So one, where do you get your return or your income from? The return is generated from sale of agricultural produce. There is one very interesting difference, I'll tell you. Be very attentive. So basically you have a farmland, you're growing crops, food, fruits, vegetables, whatever. So the sale of agricultural produce is your current income part. Your current income part, the income that you're generating right now. Change in price. Now when you're looking at the farmland part, the change in price in agricultural commodities. Now what happens is, when you're comparing farmland with timber, now timber is making a longer term investment, because when you're looking at timberland, again you're getting returns from sale of timber. Timber is your raw wood, your raw trees and all, and lumber is after the processing and all, we call it lumber. So lumber prices, basically the change in lumber prices and all will determine the kind of return you will generate. There is a very important difference over here, please understand. When you're looking at farmland, if I'm growing fruits, vegetables, whatever, it will take me 3 months, 6 months, 8 months to harvest, or maximum 1 year to harvest. But in case of timberland, it might take you 10 years to harvest. So if I have to make a decision as to what kind of trees do I want to plant and what kind of lumber is going to be selling after 10 years, the decision is based on the expected price of lumber, timber, etc. 10 years from today and the growth rate in those prices and all. But if I'm looking at a farmland, if today I see that, the prices of tomatoes have gone up, or there is a significant demand for broccoli now, because apparently everybody wants to eat broccoli. So whatever. So because of that, I will grow broccoli, and I don't have to, and my prices or my decisions as to what I'm going to grow is going to depend on current prices in lumber, in timberland. My decisions are going to be depending on my expected prices 10 years down the line, and along with that, the growth rate, the kind of increase I expect in the prices. But in case of farmland, it is more of current price based. You can rotate your produce. You can grow something today and 6 months later you can make a change, but that flexibility is not there in case of timberland. It is more of a long-term investment. The return will be much long-term as compared to this one. Do you have that kind of patience in terms of, waiting for that long in order to go for a harvest season and all? A lot of questions. So, so the return is from sale of agricultural produce, and the return is based on change in prices. You can rotate your crops. You can probably plant those crops, those fruits, vegetables, etc., organic farming and all, which is going to generate higher prices and higher income for you. You can also the most important aspect is change in land prices. Land prices is where you're going to get your capital appreciation from while investing in farmland. Timberland is also going to give you land price, but the sale of timber is what you're going to be generating your income from. The price of lumber, how do you expect it to change, and what kind of techniques to use in order to grow maximum number of trees in the smallest amount or whatever is available land parcel. So you would want to have the quantity of produce is also important, that what is the girth, because I don't know how timber sells. Weight ke hisab se, do they sell based on weight? I'm not sure. Obviously, but if the girth of the tree is very large, then in that case, it is going to be fetching you higher valuations. If the quality of wood is very good, they'll fetch you higher prices. So quality, quantity and all. Land price change, of course, is there. But here the important part is it's a more of a long-term investment. The change in price, the choice is based on what will be the expected price. So you're deciding on growing something today that will be sold 10 years later. But here you can see what is selling in the market and accordingly keep on switching and rotating. Tell me, are you following this? Problem, you're seeming confused. Take care, or you're tired. Next is investors. So what kind of investors would want to? So if I go by the book, because these investments are more carbon negative, because you're investing in natural resources, you're growing crops, trees, etc. Because it is carbon negative, there are a lot of investors who want to invest in ESG related companies, which are environmentally good and climate oriented and all of that. So there could be investors who want to invest. But ultimately, see, practically investors want wealth. They want returns. So they will invest over here because maybe for tax advantages. They could invest over here because of the reputational aspect. You see so many advertisements that every product you buy, we are going to donate 1 rupee to this and that, because they want their sales to go up. That is the whole idea. You may not like what I'm saying, but that is how it is. And especially when I'm looking at it from a very practical point of view in farmland and timberland, I already told you that it's a very good way of parking black money for people, because inland you can still pay a lot of black money in buildings and all. Nowadays it's still restricted. Good builders do not take black money, but this is the case, unfortunately. Ultimately is untaxed money. You deserve, you have to pay taxes. The people who are paying taxes are, I mean, it's unfair to people who are actually paying taxes. So that is one of the reasons, but also because agricultural income and all is tax free. I'm not getting into too much of details, even I'll have to go through it, but this is one of the prominent reasons. But normally when you see carbon negative and all of that, then when you're talking about the risks of investing into these kind of asset classes, timberland, farmland and all, low liquidity. Please don't tell me that liquidity of potato and tomato is very high. I'm talking about the liquidity of the farmland or the timberland. Fixed cost. One, you've invested a huge chunk of money in land, and also the equipment and all, tractors, etc. There is a decent amount of fixed cost involved over here. And the cash flows generated could be very variable. Obviously, when you're looking at a fixed income security, you know that I'm going to get interest on a regular, monthly, quarterly, semi-annually, whatever basis. But here the cash flows are very, very variable. Maybe my harvest is very good, my produce is very good. Even then people have a problem, because if your harvest is very good, maybe there is oversupply and the prices of your fruits and vegetables and all have come down. I was shocked to know that I was able to purchase watermelon at 2 rupees from some place we were traveling, and 2 rupees this guy was selling watermelons. 2 rupees, one watermelon. Imagine the kind of money that farmers get. And ultimately the objective was to remove all the middlemen who are there, who are not actually adding value to a very large extent, and to make sure that the farmers get what they deserve for the produce directly. So it's very important, right? Thankfully we have e-Chaupal, and nowadays I think there was one startup I was reading about, Ninja Cart or something, that is also getting into this space where they're trying to connect the farmers directly to the consumers and giving a better price to the farmers and all. So liquidity, low, fixed, variable. So that is your harvest, and also there is variability in terms of cash flows. Then your weather changes could impact the kind of produce you have and the quality of produce. The quality of rain, the quality of all these things also impacts as to what is the quantity, and as well as the quality of the crops you have grown, the fruits, vegetables, whatever. Natural disasters, forest fires, unfortunately, I don't know what has gone wrong, but 2020, 21, we have noticed forest fires across the world at a very, very large scale. I don't know if you people even read about it. You will talk about Australia, but there was a very big one in Uttarakhand as well. So please think about your country as well, along with that. So Uttarakhand had a forest fire, Amazon we had, Australia we had a bad one, US we had, Canada also there was one if I'm not wrong. But there was major issue with respect to forest fires. Seriously, it used to be it's very heartbreaking when you actually read and learn about it. Just imagine the number of animals and all burnt to death through that. So yes, these are major issues and major challenges and risks when you're investing in an asset class like a farmland or a timberland. And relate things. You'll remember automatically. You don't have to mug up things. You cannot mug up finance. Start relating things to what you're reading, what you're seeing, what you're learning. Put together all those things. It's automatically, and when you're going to go through questions and all, it is going to be application oriented. You'll not be asked a formula, just given numbers and calculate and all of that. You'll have to be able to apply yourself in situations, especially when you start working. So learn from that perspective. You understanding? Connect things. Anyways, this is farmland and timberland, very easy.